A very warm welcome to everyone. Today we are going to do the topic of fund flow statement. Today we are going to do the topic of fund flow statement, and I am Mrs. Vasu Sharma, Assistant Professor SAIT. Let's have a glance of the lecture. That is, we are going to study about the meaning and definition of fund flow statement, importance of fund flow statement, way of preparing fund flow statement, precaution to be taken while preparing fund flow statement, and some few numerical questions. Now we talk about the philosophy of fund flow statement. It is a continuous process. The study and the control of this fund flow process, that is the uses and sources or application of fund, is the main objective of financial statement to assess the sound or solvency or the liquidity position of the firm. And the fund flow statement was also earlier known as statement of fund flows or statement of sources and application of funds. And this statement was deemed to be necessary as balance sheet and income statement, but it did not show us the complete picture of entire economic activity. And this was seen that the statement is necessary to make a summary of your investing and financing activities. Now coming on to the meaning of fund flow, the term fund flow has made up of two words. One is the fund and another is the flow of funds. I think the both terms are pretty much clearing about their own itself, that what are funds and what is the flow of funds. So let us first understand what is the meaning of fund. The term fund is used in three senses. First is cash, but the cash is a narrow sense. That is, if we say only cash or cash on bank balance only include in the preview of cash, that is very narrow concept. Funds also include the working capital. In the popular sense, the term fund used to mean the working capital, that is excess of current asset over current liabilities. Therefore, in this sense, fund flow statement includes all the transaction affecting the current assets and current liabilities. And meaning of fund flow statement, before understanding the meaning of flow in funds, it is necessary to classify the balance sheet of concern into four parts as shown below. That is the we prepare a balance sheet in which we show non-current liabilities and current liabilities, and non-current assets and current assets. So the arrows that have been made over here shows the transaction that will be constituted in the flow of funds. That is what are the components of balance sheet. We know that current liabilities are there, those liability non-current liabilities are there. The liability are not payable within the one period of 1 year are called non-current liabilities, and these liability are generally payable either in long period or at the close of the business. So I have already quoted the example over there. And current liabilities are those liabilities which are payable within the period of 1 year out of the current assets. The value of these liability changes within the 1 years. And non-current asset again are those assets which are acquired for the long period of time for earning purposes are called non-current assets. Your tangible or fictitious assets come under the non-current assets. And current assets are basically cash or cash equivalents that are realized and within the period of 1 year or during the normal operating cycle are called current assets. So I told you earlier also, the fund flow statement comprises of two things, that is fund and flow. We have studied about the what is fund. Fund comes under the cash, and your working capital, that comes under the preview of funds. And flow means the changes that are coming in the funds is called flow. So the term flow means the changes incoming and outgoing. When this term is used with funds, it means that the changes taking place in funds during certain period. Whenever there is a change in the fund, it is presumed that the flow in fund has taken place. Transaction that brings working capital into firm are sources of fund, and on contrary, if the working capital decreases, it is an application of funds. Now, what all transactions that affect the flow of funds? So, following are some transactions that bring change in the working capital. That is the change in the current assets and non-current assets, current assets and non-current liabilities, current liabilities and non-current liabilities, current liabilities and non-current assets. So in brief, we can say that when one aspect of a current category and the other current category, there will be flow of fund, which means that if there is a change in current assets, there will be change in the non-current assets. So if the one aspect of non-current category, the other is the current category, right? So you can see here that one is current and other is non-current. So it is said that when one aspect of non-current category and other current category changes take place, there will be flow of funds. Now transaction that will not affect the flow of fund, that is current assets and current liabilities. There will be no change in, if you say current, there will no change. Non-current, there will be no change. Non-current liability and non-current asset, there will be no change. One should be current, another should be non-current. Then only there will be change in the working capital. Now, what are the sources and the uses of working capital? The sources of fund. That is, first is the funds from business operations, then your other incomes, then your sale of non-current assets, then your long-term borrowings, issue of additional equity and preference share capital comes under sources of fund. And uses, that is where it is applied or application of fund: loss from business operation, purchase of non-current assets, redemption of debenture and preference share, dividend to shareholders. That comes under the application of funds. Now, the meaning of fund flow statement. The fund flow statement is a financial statement that reveals the method by which the business has been financed. That is, how the business has been financed, which are the sources of the fund, and what are the application of fund. That comes under the fund flow statement, right? So what if we talk about the meaning of fund flow statement? The fund flow statement is a financial statement which reveals the method by which the business has been financed and how it has used its funds between the opening and the closing balance sheet dates. It studies from where the funds have been received and where the funds have been used. So to conclude, we can say that only those transactions in fund flow statement which affect the current assets or current liabilities. On other hand, a fixed asset or a long-term liability or owner's equity on the other hand, right? This is called fund flow statement. Now, why do we prepare fund flow statement? There are some following questions that are answered by fund flow statement. Now, where the profit is put up, you earn the profit. Where is that profit? That answer is given by fund flow statement. Why net current assets are low even though there is increase in net profit? In other words, why cash balance has not increased? Why there is excess dividend was distributed when there was low profit? and how is the amount realized from the sale of asset used. So if we continue this, how were the changes in working capital, how were the plant and machinery expended, how was the amount received from the issue of share of debenture use, why the funds are not available for the purchase of machinery and plant. Now, what is the importance of fund flow statement? What is the important? Why do we prepare fund flow statement? Firstly, we have studied what are the objectives of preparing the fund flow statement, and now is importance of fund flow statement. Now, the financial analysis and control, that is why we prepare fund flow statement. For financial planning and budget preparation, we prepare fund flow statement. Then for the use to the bankers and money lender, we prepare fund flow statement. Helpful in comparative study, knowledge of managerial policy, then knowledge of business problem, dividend policy. Then preparation of fund flow statement. Why do we prepare, or how we prepare fund flow statement? Now this fund flow statement can be prepared monthly, but usually it is prepared for 1, 2, 3, 4 or more years. The data for the preparation of the statement are obtained from 2 balance sheets supplemented by such other information from the accounts as may be needed. It is customary for a company to use the figure of the balance sheet of last year and those on the balance sheet at the beginning of the period for which the statement has to be prepared. So for the preparation of fund flow statement, the fund flow statement is divided into 2 parts. That is, the first part comprises of schedule for changes in working capital, and the second part is fund from operation. Now, the statement of changes in working capital. The statement is prepared from current assets and current liabilities in order to calculate the increase and decrease in the working capital, and is prepared in pro forma given as under. So, the statement of changes in working capital helps in knowing that whether there is increase or decrease in working capital. Now the statement of change in working capital. Now this is the format of statement of change in working capital. We have particulars, previous year's figures, current year figures, and the change in current assets and current liabilities. So you can see all the working capital, current assets minus current liability is the formula of working capital. So we will first of all write all the current assets like cash, debtor, stock, bills receivable, advance payment, accrued income, marketable securities, then short term investments. And in current liabilities, we write bills payable, bank overdraft, outstanding expenses, short term loans, increase and decrease in working capital. These all come under the current liability. So we compare the previous year figures with the current year figures and find out the change. That change can be positive or that change can be negative. Then we are able to know what is the change in the working capital. Then the following rules may be applied to current assets and current liability for preparing this statement. That an increase in current asset increases the working capital and decrease in current asset decreases the working capital. An increase in the current liability decreases the working capital and decrease in current liability increases the working capital. It is very obvious question because the formula for the working capital is current assets minus current liability. So when you subtract current assets from current liabilities, then obviously if there are more of assets and less of liability, there will be positive change. But if the liabilities are more than your current asset, automatically your changes in working capital are negative. Now the fund flow statement again. Now how to prepare a fund flow statement? It is prepared in T form. The left hand side is comprises of sources of fund and the right hand side comprises of application of funds. So the item of sources and application of funds are given below. Now the following are the sources from which the funds come, that is funds from operation, income from investment, issue of shares and debentures, then raising a loan, sale of fixed asset or long term investment, you get a receipt of interest on your non trade investments or dividend or refund of any tax. Then decrease in working capital comes in sources of fund. Then application of funds, where your funds are being applied, that is funds lost in operation or repayment of any loan, redemption of your shares and debentures, your purchase of fixed asset and purchase of long term investments. These are the application of funds. Then payment of cash dividend, payment of taxes, drawing in case of propriety or partnership, and loss of cash by embezzlement and increase in working capital. Now this is the pro forma of funds from operation. It has to be calculated in this way, that is net profit for the current year, then add non fund items like depreciation, goodwill, patent, preliminary expenses are written off. Then we have to deduct non fund items and non-trading incomes, or non-fund item you can say non-trading incomes, that is already credited to P&L account, dividend receive and profit from sale. So you get funds from operation. Now another account is prepared, that is profit and loss adjustment account is prepared, in which we have already discussed that we have to do some sort of adjustment in profit and loss, that is depreciation, goodwill, preliminary expenses, any transfer that is done to sinking fund reserve, any loss on sale of fixed asset, then opening balance of P&L appropriation, any dividend receive or any over provision written back, or then we get the funds from operation as the balancing figure. Now, while preparing fund flow statement, the following rules must be remembered, that increase in fixed asset indicates the application of funds. When you are increasing fixed asset, you are buying the fixed asset. You are buying the fixed asset indicate that you are applying the funds. Then decrease in fixed asset indicate the sources of fund. Then increase in fixed liability indicates sources of fund. Then decrease in fixed liability indicate the application of fund, and increase in share capital increase the source of fund. Decrease in share capital means application of fund. So the following will illustrate these rules. We have sources of fund, that is if you purchase fixed asset, that is sources of fund, then fixed liability and share capital, and application fixed assets are agar increased and fixed liability are decreased and share capital is decreased, means there is a application of funds. So some precaution has to be taken while preparing fund flow statement, that is there's changes in fixed account, the internal reserve, provision against current assets should be remembered, then change in current assets should be calculated, interim dividend, investments, provision for taxation, proposed dividend, profit and loss on sale of fixed assets, dividend received, goodwill and preliminary expenses written off. So following points are must kept in while preparing the fund flow statement. Now some important short type questions usually are that state the meaning of fund flow statement, how the schedule of change in working capital prepared, discuss the importance of fund flow statement, explain the funds items and non-funded items with example, write a short note on application of fund, how the funds from operation calculated. Then you should know what is the difference between fund flow statement and balance sheet. These are the questions that are usually asked in examination. I hope I am able to clear up with this topic, and acquainted your knowledge regarding the topic fund flow statement. Thank you.